Hello everyone, welcome back to my channel. Today I will talk about 12 different stocks that might give us a nice return in 2021. Some are value stocks and other are growth stocks, and some of them are new to my channel as well. If you're new to my channel, consider subscribing and smashing that like button since it really helps the channel out. And also I have a completely free Discord group chat, the link for that is down in the description below. Before starting with the list, I do have to say that I'm not a financial advisor and all of these stocks could easily go down or up a lot as well. So take into consideration the risk you are taking. We all know about a possible crash coming up next year that has been all over YouTube in the past month or weeks, but no one really knows what is going to happen. So if you ask me if this is a good moment to start investing or should you wait since that crash might be coming, my answer is yes. It is never too late to start investing, and this is the best time to start investing, and it is impossible to time the market. Never try to time the market because it is impossible and will make you either lose a lot of money or lose opportunities in the long term. Also, I'm a long-term investor, I'm not a day or swing trader. 2021 could be another year where we see a bull market, and even more if the government keeps bailing it out, or we can see huge crash after such a big run-up. That is why it is important to invest depending on your risk tolerance. Invest in good and established value and growth stocks that could sustain during a crash since nothing is certain. Also, even if you start investing right now, I always recommend you keep a certain amount in cash to be able to double down or at least average down if the market drops. That is my best strategy and the one that has always worked for me. Now let's get started. The first stock in the list is a group of 6 stocks that I think all of them in the long term are always a good investment to have in your portfolio since they are well established companies already. And I assume you already know that I'm talking about the FANG plus M stocks. Those are Facebook, Amazon, Apple, Netflix, Google, and Microsoft. All of these 6 stocks have been having excellent revenue growth, some better than others, and have been able to find a way to revolutionize and innovate every year. Facebook created their Facebook shops this year, Amazon is entering into the pharmaceutical and telehealth industry and the autonomous vehicle industry as well. Apple have had an excellent growth in sales for their new iPhone, and the rumor about their car got confirmed this year. Netflix has been having a massive growth this year due to the pandemic and don't think it will slow down that fast. Then Google has the #1 and #2 search engines and are growing and expanding even more every year with all the amount of data that they collect on a daily basis. Lastly, Microsoft, another huge company that has been having excellent growth this year, and their cloud Azure has been growing a lot as well. I own most of these stocks, not all of them, but still I think that they are excellent investments in the long term to give kind of a stability to your portfolio while you invest in other volatile growth stocks that, yes, could give you a way better return but are more volatile in the short term. Next stock in the list is the last stable stock in the list, and it is Disney, ticker symbol DIS. This stock has performed excellent this year. It is up 102% since the crash in March and over 17% year to date. Even though they got hit very hard by the pandemic and their business went down by a lot since they had to close their resorts, theme parks, and cruises, they have been able to sustain and even grow with their streaming services. They were expecting to get 90 million subscribers by 2024 in Disney Plus, and they already hit 86 million subscribers in a little over a year. While their other streaming services such as ESPN Plus, Hulu, and more have also seen a massive growth year over year. That is why they have decided to improve that segment of their business. Stock number 3 is a new stock, a stock within an industry that I started talking about a month ago. This industry is a gaming industry. I do have to say that it's an industry that I expect to see it grow in the coming years since it is growing a lot and big hedge funds are starting to notice it. Even more since the pandemic has accelerated their growth after every single kid had to stay at home 24/7. The stocks I've been watching are EA Sports, Activision Blizzard, and Corsair. All of these stocks have been having a nice growth, and even Activision Blizzard that saw a decrease in revenue last year has been performing nice this year. I think this is an industry worth maintaining in watch list since I think it could give me a good return in my portfolio. Stock number 4 is Salesforce, ticker symbol CRM. Salesforce is the world's #1 customer relationship management company. It is a cloud-based company that has been having excellent revenue growth as well on a yearly and quarterly basis, and I don't see it slowing down as they continue acquiring excellent companies to innovate and expand even more as a company, to be able to provide a way better service to their clients. I already started a position in this stock about a week or two ago. I'm looking to add more with time as it maintains at current prices or even if it drops. Also, ARK Invest, the best growth ETF in my opinion, has been adding more and more of Salesforce to their portfolio as well. Stock number 5 is a growth stock I found out about 2 weeks ago. This stock is JFrog, ticker symbol FROG or Frog. It is another cloud-based company that provides tools for software companies to enable delivery software updates faster on any system. It has been having an excellent revenue growth quarter over quarter and year over year. Just this last quarter, they reported a revenue growth of 46%. I do have to say that they went public this year, so I do expect volatility in the stock, and my target price to start investing in it is around $50 per share, meaning that right now it is a little bit high in my opinion. I do have a video analyzing more in depth this company, which I do recommend you watching after this video, since it is a stock that, even though it is a little high right now, does not have that much hype within retail investors yet. Stock number 6 in this list is actually an industry. Even though I see this industry is highly overvalued, I still have it in my watch list because I'm waiting for a dip to happen. This industry is the electric vehicle industry. We all have seen how every single EV stock has gone up massively this year because of the hype within the industry, since everyone is trying to find the next Tesla or next Neo, but we have to be careful where we invest. We have to understand the company, their fundamentals, and see if they are able to do what they are planning to and not end up like Nikola, for example. You guys have to take into consideration that this is a very volatile industry, and I would invest in companies like Tesla, Neo, Workhorse, and Hyliion. I'm supporting this industry right now because of this. Biden has said China is set to dramatically outpace the United States in EV production, but the United States, he said after November 3rd elections, could own the market with the right green policies. He has promised to build 550,000 EV charging stations and create over 1 million jobs by investing in clean energy research. So if this is true, if this really happens, we might see a huge expansion in the industry within the US that could push even more the growth of the EV companies. Next stock in the list is Square, ticker symbol SQ. This is my favorite fintech growth company that has been having excellent revenue growth, as well as it has disrupted the banking industry, and I think it will continue expanding and innovating as they create new services or programs for their clients. I already have a position in this stock that it currently represents almost 5% of my portfolio and have an average cost of $153.95 per share, which means that I'm up 51.69% in my position. I do have to say that I'm planning to add more to this position, since I was not able to invest everything I wanted at the beginning, since the stock has not stopped going up, but still I think it is a good investment in the long term. Stock number 8 in the list is Lemonade, ticker symbol LMND. Yes, I know I've talked a lot about this stock in my channel, but I have to say that I love it. I love their company, their business model, everything. As Square was able to disrupt the banking industry, I'm waiting for Lemonade to disrupt the insurance industry in the long term. Yes, I know the stock has gone up over 80% since they went public, but have to have in mind that this is a very volatile stock and the lock-up period expires in February, and I'm expecting it to go down a bit so I can add more to my position. I'm not sure if it will go down or not as I want to, but it is definitely a possibility, and I will keep an eye on it since I think they have a lot of growth opportunities. Stock number 9 in the list is Shift Technologies, ticker symbol SFT. This company has been having excellent revenue growth and is expanding rapidly. Even though they compete with Carvana, which is a well-established company, I think they have a lot of growth potential as well. They are not available nationwide, but have been expanding very fast this year, which is incredible since we are in a pandemic, and they have also been having excellent revenue growth. Analysts are expecting for this stock to go as high as $20 per share or as low as $7 per share. I have an average cost of $8.48 per share in this position, and I'm planning to add more with time. Stock number 10 in the list is Palantir, ticker symbol PLTR. Palantir basically helps companies that have a ton of data available, and Palantir helps them organize that data and give the company very useful and super simple information that will help the business with decision making. Even though they have reported excellent revenue growth, I do want it to go down to be able to start a position. Stock number 11 is a well-known cloud-based company called Dropbox, ticker symbol DBX. Dropbox were the pioneers in the cloud business, and their growth has been exponential since then. Analysts are expecting it to go as high as $37 per share and as low as $20 per share within the next 12 months. But as a long-term investor, I do expect to see good return from Dropbox. Last but not least, Tattooed Chef. I'm sure most, if not all of you, have seen a lot of videos about this stock since it is all over YouTube. Even I did a video about it if you want to go and watch it after this video. The stock has gone up a lot this year as the company has seen a massive exponential revenue growth. They are in a high demand industry, the plant-based industry, competing with Beyond Meat and the very good food company. But in comparison to those companies, Tattooed Chef has way better valuation as of right now, in my opinion. Now, reading about expectations for 2021, I found this article talking about Wells Fargo's predictions for 2021 and thought it was very interesting. First, they said that Tesla will become the new AOL. Then they said large caps company underperform average stocks. Crypto as a preferred speculative instrument undergoes reassurance, then small caps see reassurance, volatility decays, lows, and more. I thought they were very interesting predictions for the year and wanted to know what you guys think about them. Let me know in the comment section below. Thank you everyone for watching. Hope you enjoyed the video. Please smash that like button and subscribe since it really helps my channel out. Do not forget about the 4 free stocks you can get with Webull with the first link down in the description below. Thank you and see you next time.